You're listening to the Connecticut Real Estate Edge podcast, your source for tips and tricks on building wealth through real estate in Connecticut. You will get the best techniques from leading local experts in real estate and lending. Now, here's your host, Robert Weinberg.
Good weekend to you, my friends. Welcome to Mortgage Matters radio show and the Connecticut Real Estate Edge podcast, along with Rob Weinberg. I'm Gary Byron. Rob, good to see you there, brother. How you been?
Good to see you, Gary. All right. How about yourself?
All right. So, look, I'm not doing too bad. I'm doing well, all things considered. I'm still looking for a house.
Yep.
It's here we are in early February, and I can't find what I'm looking for. Now, mind you, I'm not under a timetable. I don't have to move out. My house is paid off. I'm doing fine. I don't have to move at all, period. But as you know, because through you, I am approved, pre-approved, approved, whatever you want to call it, for a mortgage. And I'm just doing a cursory look of what's out there. And all right, so here's my dilemma. It's not like there's zero houses, but the inventory is not high. And I'm finding the two extremes, either not what I'm looking for because it's on a low end, or it's too rich for my blood, where I don't need 5 bedrooms, or even I don't even need 4 bedrooms. 3 bedrooms is perfect, and you know, I don't need 3,500 square feet neither. Well, nor do I really even need 2,500 square feet for that matter. So it's very difficult to find, you know, a moderately priced home, you know, 3 bedrooms, 2 bathrooms.
Yeah, it's that inventory issue we've been talking about for over a year and a half plus, right? And, I mean, it's just the time of year, the seasonality stuff. People don't really like listing their homes in the middle of the winter.
It's hard to have open house.
It is,
right?
And then you got the holidays and people vacation, and you got people coming and going, right? So much around that time of year with New Year's. So a lot of people strategically say, let me list my home in the spring.
Yeah.
That's when things start heating up. So if you can stay the course, and I know you're pre-approval, you got quite a bit of time left on it. So keep looking, because you might find something, but know that your opportunity is probably going to start around that March or April. You'll see an influx of people putting their homes on the market, but there's also going to be more competition then. So be ready. You know, be good to negotiate and ready to go. Obviously, you have a top-notch agent. So that's what I would say. Don't lose your motivation. Stay the course. Stay the course.
All right. So how long typically from the time that I say, you know what, I'm interested in this house. I went to the open house, kicked the tires, so to speak. I'm like, all right, I'm ready to put an offer in. Let's just say for ha-has, just for the sake of time. It gets, you know, they accept my offer. Working with you on lending, how long does it typically take from the time that I say yes to the time that we do a closing?
Typically 30 days or less. That's typical.
So about a month. Okay.
20 to 30 days, you know, depending on the specifics, 20 to 30 days.
Okay.
If something comes up, then it can drag out a little longer, maybe closer to 40, 45 days. But generally 30 days or less, and especially because you are, you know, proof positive of my process, where we got all your documents up front, like we pre-underwrote the loan. So you're ready to rock and roll. You're already knee deep in the process, so we can move quickly. Some lenders, some banks, they're not going to do all that until you're in the process. So it could take a bit longer. But one of the reasons why agents love working with me is because the buyers that I refer to them and that we work on together, they're so further along in the process that we can do these aggressive timelines. I had a client, their offer got accepted yesterday, and the agent said the reason why the offer got accepted is because they could close in 30 days. You know, everyone else was 40 to 60 days. We did 30, and here we go. So, you know, we've talked about during the home buying process all the people that you need to have in play, the real estate agent, the attorney, the mortgage advisor. We've touched on the insurance piece, but what I wanted to do today was dive into that, because part of your process, and anybody that's buying a home, is you're going to need to get a homeowner's insurance policy. You have to protect yourself, and the bank also has to be protected. They're lending you hundreds of thousands of dollars on this home. So I thought it'd be a great opportunity to bring in one of my top insurance partners, Amy Varza from Comparion Insurance, formerly Liberty Mutual, now Comparion Insurance. And me and Amy have known each other for 4 or 5 years at least. Yeah. I had met her actually at a festival years ago. And, we did some business, referred some clients. I got my personal insurance through her. So now I've been really over the last couple of years, referring a lot of clients. People have had a great experience. She's one of the foremost experts in homeowners insurance in the area. A lot of experience. And I just thought it'd be a great opportunity to bring her on to uncover a lot of information, dispel a lot of myths, give homeowners and homebuyers what they need to know when it comes to homeowners insurance, because so many are getting a rude awakening when they get that renewal policy or that first policy going, whoa, I didn't know I had to pay this, or why'd the policy go up so much? And right now, the timing for this is crucial because so many people are getting that stuff in the mail. I know I just got mine in the last couple of weeks. So that's why I wanted to bring Amy on today. I thought she'd be a great resource for all of our listeners.
Well, Amy, welcome.
Thank you, Gary. Thank you, Rob, for having me. I'm happy to be here.
Oh, it's great to meet you. And I'm glad that we're actually having this discussion. I think it's probably one of the few discussions in the 2 years that we've been doing this show that we really didn't. We would do a very cursory, talk about, but we can kind of get into the in depth a little bit to the let's do that. Well, what are some of the basics of homeowner insurance, and why is it important for property owners to have full?
Yeah, absolutely. Let me just first start by saying I think Rob and my businesses complement each other because you put out the speed and ease of doing business, and I love to do that for my clients as well. And I think that tees off of what you just were saying about being ready for the process. So, and being at Comparion Insurance Agency, a Liberty Mutual company, I'm able to be a resource for my prospects. And I love doing business with folks like Rob that put out that same type of energy in there to help people. So with homeowners insurance, there's sections of coverage and limits. So the coverage you have is protecting you.
Thanks for listening. If you have questions about the information we've covered or would like to discuss mortgage financing for your situation, you can reach Robert Weinberg by visiting
www.robgw.com. If somebody gets hurt on your property. So within your policy, you have different sections of coverages that point out where these things would fall under if there was a claim. So it's important to have because the policy is protecting one of your greatest assets, which is your home. So if you are found liable for something, you want to protect that asset so that somebody can't personally come after you.
I had an incident years ago where I had water damage and it affected my kitchen. The bathroom upstairs. I came home from the beach, and it looked like there was a waterfall from my ceiling. I'm like, oh my goodness, yeah. Which the sad thing, it was like a $15 hose, from your toilet, that just anyhow.
That gave out.
Yeah, and it flooded and it went down and it came through the ceiling.
Unforeseen circumstance.
Oh yeah,
for sure.
How do I know when the hose is going to go? So it did some damage to a kitchen table, and they gave me, I forgot, this is a few years back, they gave me X amount of dollars for it. But because they said that's what it was worth. But I'm like, well, I can't get a kitchen table for this amount. Well, I guess if I go to a tag sale or if I go, I don't want to mention any brand names on the show. That's why. But I mean, there's probably a couple of stores I could get a new kitchen table at, but I didn't want to go there. I wanted something if I could look, I'm not looking for the exact same thing. I'm pretty reasonable. But something comparable.
Yeah.
And they're like, well, no, this is all we're giving you because this is all the value that the table was worth. But it doesn't solve my problem.
Right. It sounds like to me, Gary, that maybe your policy was missing replacement cost. And without replacement cost, that coverage is going to pay out on a depreciated value. So if that table had nicks and scratches, it's depreciated in its value over time. So that policy is not actually replacing your table. It is giving you the value of the table as it looks today.
Is there a policy that's available where I could get full replacement coverage?
So replacement cost coverage is option on policies, and you just want to make sure your policy includes that for certain, unless depreciation is going to come and get you later.
Well, everything gets depreciated. I mean,
Right.
second you buy a car, it depreciates as soon as you drive it off the lot.
Yes, that is true. But the policy can bring you back to whole, which is what it should be doing. And that's where that replacement cost comes in.
So what does a typical homeowner's insurance policy cover then?
Yeah. So your dwelling coverage, which is the main building on your land. In addition to that, there's other structures coverage, which is anything detached from the structure, like a shed or fences.
Okay.
Then you have your personal belongings inside. So think if you were to take your house and flip it upside down, everything that falls out, that's going to be your personal property coverage. Your loss of property use is also a big portion of the policy. Let's say your home is uninhabitable due to a covered loss, fire, water damage, and you've got to go stay in a hotel, or you've got a family of 5 and you need to go rent out another home to be comparable to what you were living in. That's going to be your loss of use coverage.
So there's that exists. I can get coverage for that.
Absolutely. Okay. It's standard. It's
on
homeowners.
Okay, good.
Yes, correct. You have liability protection to others if you're found liable for somebody's injury on your property. So it's important to make sure that liability coverage is comparable to assets that you might have. So if you were found liable for somebody's injuries, how much do you need to protect? How much cash do you have in the bank? Maybe it needs to be protected more than a standard $300,000 in liability on a homeowner's. Maybe you need $1 million umbrella so that you could sleep well at night knowing if you were found liable, that your assets are protected.
So, like if somebody falls down a flight of stairs, or in the wintertime, not a walkway from my driveway to my front steps, but maybe the sidewalk down by the street that I'm responsible. I believe the law is 24 hours from the end of the storm. You have that you have to, I guess, to clear that area. Mm-hmm. But as you know, you can clear that area, and then overnight it freezes, and then someone's walking their dog, at the crack of dawn the next morning, and then slip, and I'm responsible for that then.
Absolutely.
Okay. And that's what the liability coverage would cover.
Exactly. And actually, some people don't know this, but it extends off of the property too. Let's say you're at the grocery store and you put a bag down, and an elderly person doesn't see it there and they trip over it. Your homeowner's liability can actually extend to these cases off the property that you're found liable for. Now, keep in mind that umbrella coverage, if you take an additional policy in addition to the homeowners, is going to kick in if those homeowners' liability limits are exhausted. So if you do have assets to protect, an umbrella policy is something you want to talk to your agent about.
If you own a dog,
yeah,
and it bites the mailman as he's approaching your house to put some mail in your box,
liability coverage.
Yeah,
absolutely. Now, let's take those situations and let's just say they don't want to sue you for the $300,000 up to $1 million in coverage. They just want you to pay their medical bills. That's where medical payments comes in on the policy. It tends to be a lesser limit of maybe $1,000 to $5,000 in med pay. But if that person doesn't want to go through the litigation piece, they can search for your medical payments. Like if your friend burns himself out of your grill.
Yeah, that sounds like something that you would know, somebody you would know personally, saying, hey, listen, man, I'm not going to go after you personally, but if you could cover my bills, we'll call it even. I think that's pretty fair. That's a good friend.
So if you are in the more of the conservative side, I do recommend, those increased liability limits with that umbrella to best protect your assets.
All right. So then how does homeowners insurance differ from like other types of insurance? Let's say, for example, like renter's insurance.
Absolutely. So the main difference is that dwelling coverage for that structure. In the case of a renter's insurance policy, you don't own the building. And in the case of a condo policy, you're part of a homeowners association, which is actually protecting those exterior and interior walls. So dwelling is the main difference because you don't have that structure to protect.
How do I know? You mentioned a $300,000 policy. You mentioned this $1 million umbrella. How do I know how much coverage I need in my policy?
Yeah, it's a fact finding with your agent. Getting into the weeds on what are we protecting? What purpose does this insurance policy need to serve to best protect you and your family's future? So really, it's having that relationship, that conversation on a annual or semi-annual basis with your agent, so that there's open lines of communications of what are your worries, what is on the line here.
Yeah,
I'm finding a lot of people lately have been contacting me when they get those renewals because they may have set up a relationship with their agent, gotten a great policy in place, and now they've been in their home a couple years, and every year that policy renews. So what's going to happen is when that renewal comes in, the coverages are going to change. And what's been happening in the last year or two with the home values going up so much, the insurance companies, regardless of what carrier you have, when it renews, they're renewing it at a much higher level. Higher dwelling coverage, all these coverages Amy mentioned are going higher and higher. What does that mean to you? Higher expenses. Mm-hmm. And most people have their insurance included in their mortgage payment. So that means a higher mortgage payment. So a lot of people freak out because they get this in the mail and go, whoa, I was at $500,000 last year. Now I'm at $700,000, but my house didn't go up that much. What gives? What's going on? I mean, like Amy said, you need to contact your agent and find out what's going on and what the deal is. But what I find is most homeowners will get this renewal and just brush it off, throw it aside. You'll get to it later, but it's not good because you can't make changes. You can't be proactive. So when you get that renewal, use that opportunity to get with your agent. I've seen certain circumstances where they can reshop your policy, save you hundreds of dollars a year right off the bat just by making a phone call. If you blow it off and ignore it, like most people do, then you're going to be screwed until next time.
It's once a year, right? Homeowners
once a year.
Every 12 months.
It's not a contract, though, so you are able to switch midterm. Oh. But alluding to what Rob was saying, you kind of see it come in the mail, you put it away until you see it in the mail again. But yeah, people should know that. Same with auto insurance. It's not a contract, so you are able to shop around midterm.
Speaking of auto insurance, are there discounts? Like if you get homeowners through us, we'll give you a discount if you bundle it,
Absolutely.
Where you get auto insurance and homeowners. You've heard of this.
Absolutely. So sometimes bundling does not make sense, but in most cases, working with one agent on home, umbrella, auto, life insurance, it all adds to the compounding discounts that the agent is able to provide. Even if I write you a policy with X company and your auto with B company, that auto company may allow me to discount your auto,
That's
even though
awesome.
it's not with them. Mm-hmm.
Amy, we do this show every week, and we have for quite a while. And we always talk about credit score.
Yep.
Right, Rob?
Absolutely.
Oh, yeah.
Does that have any effect on insurance or...
Yeah.
Oh, it does?
Absolutely.
Oh, I didn't know that.
Auto insurance as well. So your credit score holds an insurance score portion within that credit score, and it does get pulled when you run quotes. Now, it's not a hard hit, so don't be frightened by that. Your mortgage person, and Rob can attest to this, is fine for you to shop insurance
that's fine.
while you're getting your mortgage. He probably wants you to shop your insurance so that he can get you into the best monthly rate. So yes, within this insurance score is payment history to insurance companies. That's what it's looking at. So it gives us insight into past history and your overall credit score. So it does impact your rates. It puts you into a different tiering on the back end of the quoting process.
Just one other place, having great credit can definitely help you save money, for sure.
Absolutely.
Folks, you are listening to Mortgage Matters radio show in the Connecticut Real Estate Edge podcast along with Rob Weinberg. I'm Gary Byron. Our guest this morning is Amy Varza from Comparion Insurance. The phone number is 203-206-1199. Again, 203-206-1199. We'll, of course, go over that more at the end of the show. And as far as Rob Weinberg is concerned, I know you're going to want to make an appointment with him. 860-413-3938. Again, I'll go over all the points of contact more towards the end of the show. So then what should I be looking for when comparing homeowners insurance policies?
Yeah, so actually, if I can, step back to something Rob was saying about your dwelling evaluation and what it's going to actually cost to rebuild, because this is something you want to look at, a big comparable factor when you're looking at different home quotes. So, knowing how much you need to insure your property for. So during the quoting process, your agent is going to ask you questions pertaining to the features of the home, and that in return is going to spit out a rebuilding valuation. So what it's going to cost to get a crew in there today to rebuild this home if there was a total loss. Much different than the market value of the home. This is your rebuild evaluation. So there is inflation on the property, on the dwelling coverage, as Rob alluded to earlier. And that's one thing to look at when you're comparing insurance companies, is just to make sure that they're doing their due diligence on asking you the questions about the features of the home so that we're insuring it for the proper amount.
I've seen it just balloon some of these coverages. Someone will have a house and will have it appraised for $500,000, and then they're getting an insurance policy and the dwelling coverage is, $800,000, $900,000. Now, like Amy said, it's based on what will it cost to rebuild your home. But when you're comparing insurance offers, I've found one company may say it's going to cost $800,000 to rebuild your home. Another may say it's going to cost $685,000. And as you would expect, the lower dwelling coverage, or that lower amount, is going to be typically a lower premium. So you do want to compare apples to apples, but at the same time, you don't want to be paying for all this extra coverage that maybe you don't need. And I've found clients that do talk to several agents, or someone like Amy that can shop multiple carriers. Your premium might be $1,800 with one, and then another comes back at $1,100, $1,200, just by having that agent that knows what they're doing in the different lines, different dwelling coverages, different policy types. Like, they can help really hone in on saving you money. That's what this is all about.
So
saving you money.
That probably answers why your homeowners insurance can go up the second year, and you'll sit there and go, I never put a claim in. It's the cost of wood has gone up, materials has gone, inflation, but materials. Yeah, I mean,
everybody's policies have gone up in the last year.
Yeah, without even filing a claim. Yeah.
Whose policy's gone down because all these costs went up so much. So, use it as the opportunity to have that relationship and shop around a little bit. Don't ignore it.
All right. So speaking of filing a claim, how do I file a claim? What documentation do you need?
Yeah, absolutely. So one of my best tips for homeowners to be prepared for a potential claim would be to do a video of your home once it's all furnished and has all of your belongings in it. Just walk around your home, take a video. When, if heaven forbid, there is a fire, there is water damage, it's going to be a much easier conversation with your adjuster to show them their video. Hey, this is the piece, this is that the wood piece, the antique piece that I had here in my entryway. That's a great way to help alleviate some of the pain points when trying to figure out what you lost. So really, it's a conversation with your adjuster. There are some ways to prepare for it by taking a video.
And I don't have to use the insurance company's adjuster, right? I can use my own.
You could get a second opinion, yes. Yeah. But typically, there needs to be some representative from the company itself.
Well, sure, but they're working on behalf of the insurance company. I want to make sure that I'm represented as well.
Right. So you have a little bit of leeway there, and they can conversate with the adjuster as well and sort of be a middleman if you're kind of disputing what's there. And same thing for whoever you choose to do the repair work. There's recommended the insurance companies have recommended contractors that they actually will guarantee their work on, or you could go to your contact, which is the same for like body shop use as well.
That makes sense.
Yep.
Are there any specific coverage options that are particularly important, let's say for buyers or homeowners who are refinancing their property?
So nothing too different with a refinance versus a new home purchase, other than having that fresh conversation with their agent about any updates they may have done to their home since they last spoke, and this is going to uncover any new discounts. Maybe you did a new roof. Oh my gosh, we haven't spoke since 2012. We have that roof from 1999. Let's get that new roof credit in there. And that's also going to open up any gaps in coverage, and at the same time allow for a shopping moment for your agent. So So get the work out of that agent.
I'll say on the mortgage side, we're not too concerned with all the specifics on the insurance policy other than does the dwelling coverage, will it pay off the mortgage if something happens? That's the number one item. Well, sure. Now, she had talked about replacement costs. So like there's certain areas, not much in Connecticut, but I see it a lot down south where the house dwelling actual building might only be worth $150,000, but the land it's on is worth, a ton, like $500,000. So you've got this house that's worth $800,000, $900,000, but they're only insured for $150,000, $200,000. Mm-hmm. So that's where the mortgage part comes in. That's all you have to worry about there.
I'm running out of time. Probably only have time for one more question. I just wanted to know maybe the difference between owner occupied versus investment property policies.
Yeah, absolutely. So they are two different properties, two different policies. So the landlord wants to be protected through a landlord policy. That policy isn't going to have personal property protection on it, most likely because that landlord does not have any personal property at that location. That's a major difference. And another thing I see with investor policies, some of them only want functional replacement cost, which means hey, this is a 3-family dwelling in Waterbury. Our evaluator is saying it's going to cost $900,000 to rebuild. That investor might only want functional replacement. And I do have some companies that allow for us to play with that number. If they only want to insure it for $500,000 or $400,000.
That's great. That's really important.
A lot of people are getting into that education piece that there are other companies.
You'll just find some of these insurance companies will go overboard. And I know you hear it every day, but they're like, why are they insuring me for so much? Like, this makes absolutely no sense. I don't want to pay for insurance of $1 million on a house that's worth $600,000. And we have to explain to them. And luckily, Amy's resourceful, and a good agent will have those different avenues and ways that they can kind of manipulate the policy into your favor and save you money. That's what it's about.
All right. Short answer, renter's insurance. You cover that as well?
Absolutely. It's so inexpensive and good to have, especially if you're displaced from where you're living. I think it's important to be able to go into a second place of living and also replace your personal items at the same time so you're not really down and out.
Good stuff, Aim. You want to give your email address?
Absolutely. Amy, AMY.Varza, VARZA at ComparionInsurance.com. I look forward to helping you out.
And your phone number?
203-206-1199.
All right. Rob Weinberg, Mortgage Matters radio show and the Connecticut Real Estate Edge podcast. www.robgw.com. That's a piece of cake. And his email address is mortgagemattersradioshow@gmail.com. And like I said, if you want to schedule that appointment, 860-413-3938. Again, 860-413-3938. I want to thank our guest, Amy Varza. For Rob Weinberg, I'm Gary Byron. Thank you so much for listening to Mortgage Matters Radio Show and the Connecticut Real Estate Edge podcast. Until next weekend, have a good one, everybody. So long.
Thanks for listening. If you have questions about the information we've covered or would like to discuss mortgage financing for your situation, you can reach Robert Weinberg by visiting www.robgw.com.